Ladies and gentlemen, excellencies, colleagues, friends, an honored guest, good afternoon, good evening, Assalamu alaikum. It's a privilege to speak here today at the Church House, part of the House of Commons, a place that represents democratic values, public accountability, and the relationship between institutions and the people they serve. We often speak about FinTech in terms of speed, scale, and disruption. Today, however, I would like all of you to take one step back and think about the fundamental question: how can finance and technology better reflect our shared values, our diversity, and our commitment to inclusion? In this context, I would like to explore the role Islamic finance can play in shaping ethical and inclusive FinTech solutions. So before I get into the topic, how many of you understand Islamic finance? Some of you. Great. So I'll give you a very brief about Islamic finance. So what is Islamic finance? So Islamic finance, in a very simple terms, in Islam, interest is not allowed, which is a very fundamental thing which we need to understand. And what is interest? The definition of interest in Islam is making money from money. What does it mean? So if I give you £100 today and ask you to give me back £120 tomorrow or after some time, without any justification, that £20 is interest. But if you ask me, Sharjil, I need £100 today, and I will invest or buy a car or buy a house or buy an asset, and whatever the profit or loss would be, we will share. At this moment, we have to agree how much profit, how much loss we will share, right? So that's the fundamental of Islamic finance. We can go on and on. There are a lot of discussions, a lot of talks, but that's we need to understand. And as long as we understand that what is the concept of interest, we can learn about Islamic finance very easily, right? So what are the principles we are learning here? So Islamic finance encourages risk sharing, not risk transfer. In the conventional system, what do we have? It's a I shouldn't say risk transfer. It's risk shifting. In Islamic finance, it's a risk sharing. So when I give you £100, we are sharing the risk. If there is a profit, we will get the profit. If there is a loss, I'll share the loss as well. Right? Transparency. It will be very transparent. As I said, on the first day, on the day one, you need to agree how much profit or loss we are going to share, right? And where you are going to invest or use the proceeds. Fairness, so no exploitation or excessive debt. And the last is a strong link to the real economy. That's the gist. So it has to be, Islamic finance has to be asset-backed. There are a lot of discussions can be done that no, there's, in Islamic finance, you talked about financing, lending, debt. Yes, it's there, but Islamic finance has to be linked to the real economy. And as we go along, I will connect the dots, what we have just discussed here. So these values become especially important in a technology-driven financial system. So let's look at FinTech. Now, FinTech has transformed the way financial decisions are made. When and how FinTech has started. What is FinTech? It's financial technology. It's not a new concept. We all have been using ATMs for many, many years. We have been using online banking or accessing our bank accounts online. It's all FinTech, right? But why FinTech has become FinTech or buzzword in last 20 years? What happened during financial crisis, 2008, 2010? What happens? The whole system collapsed. Why? And I'll talk about briefly in a couple of minutes. But the whole system collapsed because of the debt-based economy, right? Now, when system started collapsing, banks started going out of business, people never thought about it. The institutions who were the blue chip organizations, they were going out of business literally within 24 hours. And it happened. We have seen it. I have seen it. I was on the call with the institution. And they said, Sharjil, look at your Bloomberg screen. And literally when we looked at it, we all were shocked. Oh, is that the news? And that's it. So what happened? What's the impact on individuals, consumers? They were not trusting the financial system or banks anymore. Banks got sanctions, fines, and you name it. So while banks were busy in satisfying the regulatory needs, we as a consumers, we started using tech, which could be Facebook, which could be WhatsApp, which could be Uber, you name it. And our way of living started changing. And when that started happening, banks were busy doing what the regulatory requirements, new institutions started emerging. And those institutions started getting the market share. And this is where the FinTech buzzword, which we are listening or hearing now, I must say this is still a start of the FinTech era. If you looked at it, how many FinTechs are literally serving or offering you the full-fledged financial products? No, hardly you can count one or two, maybe, right? So most of them are either predominantly FX, remittance, or savings or financing, predominantly financing. So this is where FinTech has transformed the way financial decisions are made. Now, if you look at the other side, how the decisions started building upon. So FinTech promises efficiency, scale, and broader access to financial services, right? That's what we know about. But alongside these benefits, today FinTech landscape also presents significant challenges. And what are those challenges? Much of the ecosystem prioritizes scale over fairness. Everybody wants to build. Any FinTech entrepreneur you speak to, I'm one of them, took a career break, took a sabbatical for 6 months. It's still going on for more than 7-8 years. But I'll tell you, everybody thinks that we can build $1 billion company tomorrow. And we've forgotten about the fairness. It's all about scale. Speed over accountability. Nobody, if you go and speak to any FinTech entrepreneur, and I'm not exaggerating, and ask about what's your accountability, how you're going to build a business, you are getting financing, you are getting investments, how you're going to return that money. There's no concept of or even thinking to return that money, right? 80 to 90% of FinTechs go out of the business in first 6 to 12 months. Why? Because there is no accountability, right? And there's all about speed. And inclusion through debt rather than sustainability. That's the key point. Again, we are doing the same mistake. What I've just talked about during the financial crisis, what happened? We are repeating the same mistake. Focus is what? Debt. Who's talking about sustainability? Nobody, right? And these are the points which we need to understand when we merge Islamic finance and FinTech. Increasingly, decisions about credit, pricing, and access are made by algorithm rather than people. I do remember the days, I literally, when I joined the bank, I got 3-week session with our head of risk. And literally, he taught me everything you can think of. Today, where is that risk management? When you offer financing, again, without naming anybody, in the city of London, there is an institution operating, and I asked them, you are offering financing. Do you have the risk management? Do you have anybody? They have 8 or 10 people. They have raised about 30, 40 million sterling. And they don't have the risk management person. And you know what they are doing? They are offering financing. How can you offer financing if you don't have the right risk management? But who is doing this risk management now? Algorithms. And when algorithms operate without transparency and accountability, they risk reinforcing existing inequalities rather than correcting them. And that's another issue which we are seeing in the FinTech era. Exclusion no longer always comes from a person saying no. It often comes silently through a system that failed to recognize people's lived realities. And this is one of the challenge which we are facing. And this is exactly where Islamic finance can strengthen FinTech, not by slowing down innovation, but by guiding in the right direction. Now, if we talked about, and I'm going to just pick, few of the points or principles which we can apply into FinTech, which influence design choices as a fundamental, at a fundamental level. So Islamic finance is all about fundamentals, right? It's not about how the life is going to be done. It's about fundamentals, how you're going to manage your finances, how you're going to invest. Like I talked about, the fundamentals are no interest, asset-backed. And if you can start incorporating that into the system, into the financial system, it will make life much easier. So if we talked about the product design shifts towards asset-backed and purpose-linked financing that is grounded in the real economy rather than speculative activity. As I mentioned earlier, Islamic finance is all about asset-backed. I've used the terminology speculative activity. What is a speculative activity? 2008, 2010, financial crisis. The size of the global GDP in 2008 was about 60 trillion. You know what was the size of derivative market, which is a completely speculative? Anybody? Any guesses? What was the size of the derivative market at that time? It's about 600 trillion. 10 times of the global GDP, right? And this is not me, this is Bank of International Settlements, this is their report, you go and you can read it. And that was the speculative world we were living. Whereas Islamic finance, what Islamic finance is teaching us, asset-backed, right? So quickly, sorry, I've just been asked, to finish quickly. Risk and AI models, governance structure is already embedded in ethical oversight from the outset rather than treating ethics as a compliance add-on. Governance has always been the part of the Islamic finance. Before even we launch any product, we have to get, of course, the regulatory oversight, but at the same time, Sharia compliance. So it is the Sharia board, they have to approve it. And if the product is not up to the point, they don't approve it and you cannot offer to your customers, right? So governance is the part of the system. Again, during the crisis, 2011, 2012, Dodd-Frank Act published, which of course changed the world. What was Dodd-Frank Act? Passed in Senate. What was it? Governance, all about governance. It's about 10,000 page document, all about governance. But in Islamic finance, we have been taught 1400 years ago, the same thing, but where we are we following it? We are not. So perhaps most importantly, Islamic finance encourages a shift in mindset from asking, can we build this, to asking, should we build this, and for whom? And this brings me to, again, the forum topic, which is cultural democracy, which means that people should be able to participate in economic life without abandoning their value or identity. It depends on Islamic financial system that recognize diversity and adopt to the readiness of people's life rather than forcing everyone into a single standardized model. So I would like to mention one more thing here. Islamic finance is not only for Muslims. Islamic finance is for everybody. And I can tell you, when we launched one of the products back in 2008, 2009, we had more non-Muslim customers. And when we inquired, when we speak to some of the customers, we said, why you are, or you have chosen us? They said, one, you are FCA regulated institution, and two, you are ethical bank. And that's what we need to look at. So this is not about creating parallel financial system, but it is about financial pluralism, building inclusive system that is strengthened trust, participation, and social cohesion. I just would like to conclude with regards to the UK is highly positioned as a global leader, both in FinTech innovation and Islamic finance. I can tell you in 2007, 2008, we had more Islamic banks than some of the Middle Eastern countries. And still we have one of the best defined system for Islamic finance here in the UK. With regards to Sukuk, which is Islamic bonds, UK, London Stock Exchange is one of the biggest exchange, with around $50–60 billion being listed in LSE. So we are proud of it. And I would like to close with a simple thought. If democracy is about giving people a voice, then ethical finance is about giving that voice economic agency. Islamic finance offers principles, FinTech provides tools. Together, they create a pathway towards finance that is ethical, inclusive, and democratically aligned. Thank you, Smina, and the entire team.